Well, thanks so much for tuning into Talking Point. I'm your host, Niraj Shah. As you've been saying, it is the mid-cap IT companies whose results have been a standout in this quarter one earnings season. Add to that, Cognizant numbers today also show that all seems to be well. BirlaSoft came out with numbers yesterday, and the operating performance was largely in line. There were a few internals, which we would love clarification from Mr. Dharmender Kapoor, who joins in right now to talk about how he believes the quarter one performance was and what can be in store for the quarters ahead. I believe they've guided to a mid-teens growth performance for the year FY22. Mr. Kapoor, great having you. Thanks so much for joining in. Put this quarter into perspective, a 4.1% growth was good. There were a few things that seemed slightly below the standards that you set for yourself at the end of quarter four. So put the quarter into perspective, and then we'll talk about the internals one by one.
Yeah. No, I think the quarter four definitely, from the wins perspective, it was a very great quarter, and it was a comeback quarter from the pandemic because it is a quarter one for our most of the customers in US and in Europe, and that means that they start new initiatives. So quarter four for any IT services company in India would always be a great quarter. In comparison, if you look at that from the wins perspective, one can say that it is lesser. But I am very satisfied because the net new has really picked up very, very well for the quarter one, and that is absolutely very encouraging because if you look in the previous financial year, the most of the growth came from the cross selling, but net new was very less because there is not much sales activity happened for the new accounts due to no travel and no meetings with the clients. That has picked up, which is absolutely very, very encouraging on that front. At the same time, looking at 4.1% quarter-on-quarter growth is very much in line and shade better than what we thought, because we believe that quarter-on-quarter consistent and sustainable growth is the one which is going to really make us win in the market. At the same time, it continues to provide very predictable result going forward. So I am pretty happy on that front. If I look at on the EBITDA side, it is in line with how the market has seen the impact due to COVID, because there are a number of leaves that got increased when people are getting sick. Okay, so there was some impact due to that. At the same time, the hiring has picked up and the hiring cost has gone down and the attrition has increased. So it does have impact on the profitability for everyone, but I think it is in line with the movement that we are seeing in the market. So there is no additional element that would have caused a surprise for the quarter. The quarter two, I believe, will be having the wage hike for most of the IT services companies. So there might be a little bit of blip that can happen, but I believe that we are fully prepared for that. And we have even looked at what kind of optimizations we are going to really bring up and how we are going to recover back the impact that is going to come because of the wage hike. So all in all, I remain very optimistic about the growth in the upcoming quarters. At the same time, that will continue to deliver more than the expectations that we set in the market.
Yeah, the net new, I believe, was 94 million odd, which was looking pretty strong. I believe that one small other positive highlight was also that your large client win, I believe, over 10 million, and that count has increased as well. Tell us a bit about the nature of the deal wins. And while the deal pipeline is strong, do you anticipate to up the ante? Because as so many people tell us, this is the best stage that they have seen for Indian IT outsourcing in a really long time.
No, absolutely. It definitely is a very good time when the demand is very high. But as you would imagine that when you get too much of one good thing, there is always a other element that you have to be prepared for. So the capacity and the supply side is the constraint right now. Demand is not the constraint, and that has come after many years in the IT industry. So it is absolutely a welcome item on our plate. But what we have to look at is that any such a challenge with respect to the supply that is coming up, it is going to create new normal, because it is not only about the capacity or the supply issue, it is also about the different work culture that is required in the future in every organization, because there is a hybrid work culture that is going to sustain for a very, very long time. So the processes and the policies and the hiring procedures and the expectation setting with the talent is going to be very different from what it used to be. So we all will learn and will set to a model that is going to bring us much better results later. So I am not too worried about the 1 or 2 quarters challenges. I am optimistic about that. The on the longer term, it is going to give us a great edge, because that would mean that the talent will have to be a very high edge talent that is actually required in the new digital era. So from that perspective, I think this is a good news, that when the demand is high, it teaches us many things that we need to do in order to create a sustainable business.
Yeah, but which brings me to my question, Mr. Kapoor. Deal wins, you reckon that you will be able to up the ante in the quarters to come?
Absolutely. If you look at very carefully, we improved our more than $5 million accounts by 5. Okay. At the same time, the $10 million accounts also moved up by 2 in the last 3-4 quarters. So we continue to add those large customers also. I believe this year will be even better, because there is a significant focus that is there in moving up our existing clients, which are the larger clients, because we went to the metal classification of our clients, so that we put a huge amount of focus on our platinum and gold accounts, and they are doing very well. So we will see that they moving from one basket of revenue to the higher basket of revenue. I am absolutely seeing that trend, and there are quite a few customers which are moving in that direction.
And even in the net new, you look to cross sell stuff in. Would it happen so soon, or does it happen with a bit of a lag?
It is already happening. Cross selling was always there in the previous year. Most of the growth that happened previous year, it was because of the cross selling. But net new generally for us had been in the range of 6 to 7%. And if we get back that level of net new in the current financial year also, that would mean that it will add on to the top of the growth that we have earlier seen. So from that perspective, it always is a good news. Moreover, when the net new happens, you get newer customers, in which even if you pick 50% and grow them to make it bigger and cross sell there, that means that your growth story will become much, much simpler and much more easier to come by.
Okay. Now, you did mention that a quarter or two of challenges don't quite bother you as much. There are a couple of wrinkles in this quarter that I saw, aside of course, the deal wins compared to Q4, which you said was to be expected. But I thought the performance of both BFSI and life sciences didn't quite live up to the mark, although you have said that I think life sciences will come back to normalcy. But what about BFSI, therefore? And the OCF to EBITDA, I think that number looked a bit wobbly this time around compared to, again, the levels that people are used at. Why is that, and can that improve?
Yeah. So if you look at on the life sciences, we remain very, very confident, because it is just that because of one program getting finished. Okay. So you will see that that revenue has moved out, but we are still able to come closer to what we were expecting, and even better than that, which is a good news. That means that now that when that baseline is there, we will continue to show more growth. Life sciences, I see a very good amount of traction that is there in the market. On the BFSI sector, if you look at that for last couple of years, we have seen slowness in the BFSI sector across all the companies. And it is because they are changing their own strategy with respect to the fintech or insurtech companies. And that had been a little bit of impact on the continuous growth or incremental spending by the industry also. So we need to definitely address that. Absolutely. We are working on our Europe strategy, so that BFSI and Europe combined together are able to grow and give us the next level of growth that should come from the BFSI. But of course, we have a job in our hand that we have to perform, and we will continue to look at in that direction.
Okay. And the OCF to EBITDA and if you does that
When you
comparison?
say, I'm sorry, I didn't understand the question on.
So what I meant was the cash generation didn't quite look as strong, right? The operating cash flow to EBITDA, that number, the ratio at about 15 odd percent, if I'm not wrong, is it lower than what typically you've done, and why is that, and can that improve?
No, I think, yeah, we have to look at that, that there is a 90 BPS impact on the EBITDA. At the same time, we continue to make the investments in multiple elements. If you look at, there is a core income, and then there is other incomes. So all that, when you put together, the net increase in the cash may not be as much, but we have given the EBITDA, which we thought would be approximately 15%, because we are making the investment and we thought that that was going to be the guidance, but we have delivered higher than that. And what we want to continue to look at is that how do we continue to generate one, better and better EBITDA despite making the investments, at the same time continue to generate more cash for our shareholders also.
So you think both of these metrics would improve in the quarters to come? Yeah,
Absolutely.
Q2 might have this wage hike impact, but otherwise normalcy will return from Q3 at least.
That is right. That is right. That is the focus. In fact, we are even working towards that. We do not have a major impact in the Q2.
Okay.
Okay, but at the same time, we have to give the hikes, and it does have the negative impact, and we need to recover it from the optimization lever that we have in place.
So would the large portion of the hike or all the hike for senior, junior personnel both happen in Q2 itself?
That is right.
Okay, so you will only see an impact in Q2, and Q3 onwards there could be recovery.
That is right.
Okay.
Because it really takes about a quarter to fully recover it back. But at the same time, when you put it in the budget, you start working on the operating levers much in advance, which is what we also do.
Okay, so you reckon, Mr. Kapoor, that you could turn in averages for the year closer to what you've done in Q1 in terms of EBITDA?
My guidance had always been that we will deliver more than 15%. Okay, so it is always good to be conservative when you're putting the guidance and continue to deliver better. And I think that is the focus that we'll continue to have.
Okay, and Q1 gives you the belief that your earlier dream, which became an aspiration, which turned into a reality in, I think, Q3 or Q4, that target stays as well.
Absolutely, absolutely. We continue to remain very confident about our $1 billion aspirations.
Okay, just one last question. What is the nature of the deal wins that is happening right now? You mentioned, you gave us some color about the size of the deals that is happening. Is there transformative work happening for the company of your size? Are there newer geographies that are starting to open up? Give us some color about how the rest of the year could look like in terms of deal wins.
So, good question. The newer deals that are coming absolutely are transformational in nature and more digital than ever. Because if you look at in the previous few years, the focus was very much on digital technologies. But now the businesses or our clients are also focused on what is the end value that they get by implementing a digital solution. So from digital technologies to digital solution is the discussion. At the same time, the digital is getting married to the ERPs and the enterprise solutions, because even the ERPs are becoming far more digital than before. They are moving on to the cloud. At the same time, they are getting integrated with the SaaS solutions, and they are also getting an integration layer done on top of that, so that they are able to provide the value that the businesses are looking for. So from that perspective, the newer deals are very much digital in nature and transformative in nature. The only thing that we have to look at is that because IT industry has seen very, very large deals, okay, in the past decade or even before that, the deals are becoming smaller and quicker, because every organization wants to become more and more agile. And that actually means that they are ready to sign the deals and continue to see the result every year, rather than wait for 2 or 3 or 4 years in order to get the benefit that they were looking for. So the deals are far more quicker and they get renewed. So the TCV may still be very higher, but that will get signed in multiple contracts rather than getting signed in one particular larger contract for multi-years.
Okay, that's an interesting insight, Mr. Kapoor. Thanks for that. One final question. at the end of Q4, you had alluded to the fact that uh, because the space is red hot, the availability of talent is an issue, and companies across the board will have to pay high numbers to either retain the talent or get new talent, whichever the case may be. And because you had mentioned that some of the times conversations are reaching a stage and then they are failing because different things might be happening. So my question to you is just that because you are a company wherein ever since you've come in and taken over, and please correct me if I'm wrong, but you've hired some key personnel in key places from different companies, and employee remuneration has been a big thing at your end. Are you facing any key attrition related issues in major employee positions? I can understand attrition would be happening across, and you would also be facing high attrition. But is it happening across key personnel, or is it happening at the lower level?
No, I think our key personnel is very stable, and I think there is no real shift that we have seen on that front. It is mostly at the junior level when the talent tend to move across the companies, and that's the reality of this industry, and we had to continue to face for that. But even if you look at between Q4 and Q1, despite the higher attrition, we had net addition of 500 resources in the company. So we have also stepped up our hiring so that we are able to hire that very quickly. That is one element. Second element is that how do we upskill or upgrade the talent that already exists. So we continue to hire the fresher from the college, because this is not a story about 1 quarter, 2 quarter. It is a multi-year story. And when we hire from the colleges, we continue to train them, continue to upskill them, and put them into the engagement so that our pyramid remains correct. So there are about 4 or 5 different parameters which has to continue to work together. And we don't have to focus just on the attrition. We have to also focus on, are we really upgrading the talent or not? Are we bringing in the freshers or not? Are we keeping the the mix between the on-site and offshore, between the employees and the subcontractor or not? So we are well aware of that, where the attrition is happening and how do we really mitigate that risk. So from that perspective, I think we are doing well. But the good part is that our key talent is very stable, and we do not see any such risk on that front.
Great. Well, we wish you all the best, Mr. Kapoor, for the quarters ahead. Lovely talking to you today, and look forward to, of course, talking to you post the quarterly numbers after Q2 as well.
Yeah. Thank you very much, Niraj.
And the pleasure was ours. Viewers, thanks, Mr. Kapoor, thanks for tuning in. Viewers, thanks for joining in to this leg of the Talking Point.
Thank you.